Hello, welcome back to Invest with Peter. Honestly, I've been really busy this week, so I'm only able to drop one video a week at this moment. But maybe next week or upper week I'll be able to do twice a week. But at the moment, please, I'm gonna be dropping once in a week. Welcome back to Invest with Peter. So please, if you've not subscribed to this channel, please kindly do click that like button, put your comment down below. That helps me, that helps channel to grow, and that helps the algorithm of YouTube to send the video all around the world. So today I'm going to be talking about the reason why I'm loading up on some of these companies that's been beaten down left and right. Netflix was a disaster, Facebook was a big disaster, PayPal in crisis and all that stuff. So the reason why I'm taking advantage of this, I'm going to be talking about in this video. But now let's talk about another catalyst that might actually affect the market at this point. See, Russia and Ukraine is going to be another catalyst that we need to look at, because if the invasion goes ahead, then we know that market is going to go down straight away. Whether we like it or not, the market is going to go down minus 30, minus 25, minus 40%, because it might go, into a big crisis that's going to affect the whole world and all that stuff. But we don't want that. So that is another catalyst that we're going to be talking for, at some point, maybe in my next video or something like that. But we need to be watching and, understand a big catalyst like that might affect us in the nearest future, probably nearest future, but not at the moment. So today, Coinbase, the reason why I'm buying into this company is Coinbase is down up to 50% down now, because Coinbase last year was trading around $370 something, but now it traded around 172 last week and all that stuff, 169, 167 and all that stuff. So tell me the reason why I'm not going to be taking advantage of a company like that that's dropped 50%. And I know this company is going to be following the trend of cryptocurrency, of Bitcoin and all that. So whenever the cryptocurrency goes up, this company goes up like that alongside. And I think cryptocurrency is the future. So why not getting involved now when it's cheap, to get in when it's cheap and ride the whole wave up there and make a lot of money from it. So that's the reason why I'm into Coinbase, and I'm loading the bag at this point. So I don't know, ask any seasoned investor, they're going to tell you this is the time to start taking advantage when a company that's got good fundamental is going down 50%. I don't know when you're going to be loading up if you're not loading up now. So Netflix came up with their earnings and all that stuff, which that was what broke the camel back. They came up and they were like, subscription was low, people are not subscribing, COVID cases is gone down now, people are going back to work, people are more busy with their 9 to 5 instead of sitting down watching video all day and all that stuff. So the revenue came down and it was a big disaster. People were shocked to see the results, and the company went down 27, 20, 30%, in a day, and they lost a lot of money just because revenue wasn't good, and Wall Street was not really expecting what Netflix brought and all that stuff. So that company went down. I think Netflix was trading around up like $500 and $600 last year and all that stuff, 2020, 2021, and this company went down to 364, 365, 350 something. That's just too low to be ignored. So when a company has gone down 50% with a good fundamental, you have to take the advantage, because once everything's open up, once everything goes back to some sort of normal, this company go back to $600-700 per share. So why are you not taking the advantage now? And if we say market is going to crash 20, 30, if market did not crash and you missed the dip, then that's another reason why you need to be smart sometimes. I'm not saying you should be trading or you should be swinging, but if you understand what you're doing, this is the time to start loading the bag on these beating down companies. Another one is Facebook. Facebook, it's no longer Facebook, it's Meta, right? They call it Meta, and that's one of the big crises Facebook they're having at the moment, because they're changing the name from Facebook to Meta. Some people still get confused, like Facebook Meta, Meta Facebook, Facebook Meta, and all that stuff. So the name change brought a crisis to this company. Mark Zuckerberg was like, well, we have a crisis and all this stuff, because the advertising is not really coming like before, because TikTok is taking, they are big competitor now. They're taking most of their revenue, and all that revenue is down, and people were shocked, like, Are you kidding me? So they're not even expecting the prospectors, rise in the revenue in the next 12 months and all that stuff. So this company went down 26% a day and lost $200 billion just in a day, and that's the highest a company has lost in a day in stock market. So Mark Zuckerberg is not in a good place. He's not in a good place at the moment, but this company is going to do well. We know it's going to be a metaverse play in the future. So why do I need to ignore it now when it's down 26, 27% and it hasn't stopped? It's still going down. So I started taking advantage, buy a little bit of it to add into my portfolio. And, why not? Because these are the reasons, these are the ways, you can get involved in these big companies. If market don't crash and you miss this deep, you'll probably end up regretting that I should have bought this thing when it went down 27%, because we might not have this deep anymore or in the nearest future. So, I'm trying to take the advantage of it now. I was like, well, I can't ignore this price at this point. This fundamental is still the same. Nothing has changed. It's a big company, and I can't ignore it anymore. So I just quickly, put some in my portfolio and all that stuff. So Facebook cannot be ignored. Though analysts were saying, well, you should wait a bit and see where the floor is. Well, if you are a long-term investor, I think once you start seeing 235, 236, 237, that's when you start buying it gradually, because though it might still go down to 228, 224, but once you start dollar cost averaging into it, everything is going to work out well for you by the time it rises back up into 300, 400 in the nearest future. See, swing traders are going to be swinging these, but you should understand yourself. Are you a swing trader or you are a long-term investor? If you're a long-term investor, then this is time to start bagging up your stocks now. All right, so the next one is PayPal. PayPal is actually one of my favorite play in my portfolio, but PayPal's been going down for the past couple of months now. I bought PayPal when it was 247 and all that, and I've been dollar cost averaging up until 201, 280 and all that stuff. But look at PayPal now. PayPal is 124, 125. It went down. They reported the other day. The report was so bad. The company was beaten down just because it's just like COVID play where people are buying stuff online, paying online and all that stuff. But now people go to the shop now. People go to the outlet to buy their stuff and pay with their card. Most people no longer use PayPal to transact their business and all that stuff. So that actually brought down the revenue. And, the company was like, the reporting was this and that. Just because of that, we could not make up with this price point and all that stuff. So the company revenue went down just because the customers, are no longer there, unlike when COVID and when everybody was locked down in the house buying, transacting online. So, but I'm still holding it. I'm not selling PayPal because, like I said earlier on, I'm a long-term investor. I'm not looking at 3, 4, 5 years. I'm looking 10, 20 years ahead. And I know this is going to be the big fintech of the future. Maybe Square. So, well, Square is called Block now. They changed the name again from Square to Block. So all I know is it's going to be the one in the forefront of fintech, because we're still going to go back to the stage where cash will be useless. Just going to be like, use your bank card and all that, transact your business from wherever you are, buy stuff. And, people, the shop and all the outlet will be saying, please use your card and all that stuff. We saw a little bit during COVID when they tell you, please, we don't take cash, we take card and all that. So online transaction will be, the biggest thing that's going to happen in the future. And PayPal is in the forefront. They are at the forefront. So I'm going to be playing that game and I'm going to be staying with them, in as much, they're still, at least they're still doing what they do at the moment. I'm not bothered. I'm still investing in them. Then Ford. Let's go to Ford. Ford also, they came, with not so good report. They were like, okay, the chip shortage is still there. Supply chain disruption, is still there for them. So they're still struggling with that. So it wasn't that bad, but they missed the earnings though. So the price went down. Like, well, I've always been dollar cost averaging into Ford. So it's still one of my biggest plays, and I just keep it there. As a long-term investor, you need to be looking at Ford as well as EV play as well. So I'm having that. So the next one I'm looking at is Nvidia. Nvidia will be reporting maybe close to 16th, I think February 16th. Oh, yeah, mid-February, I know they're going to be reporting. And I believe for AMD to beat the earnings, definitely expect Nvidia to beat the earnings as well. I'm going to be playing that. I'm going to be buying a little bit before they report the earnings. I'm so certain that Nvidia is going to beat the earnings. So I don't need anybody to tell me that. I know Nvidia is one of my favorite stocks. So I believe Nvidia is going to be a very good one. If you want to swing trade, then I think Nvidia will be good for you. Try buy below 230, and I believe you're still going to come back to this video after the earnings and say, yes, you said it, you made mention of this and all that stuff. Nvidia after earnings, I believe, will be trading over $260 to $70 a share. Honestly, Nvidia is going to beat the end. They always do, and I think they're going to beat the earnings at this point again. For AMD to beat the earnings like that, AMD was trading around 110, 115, 112 before earnings, and when they released their earnings, they jumped to $130 just like that. So I know, because they are semi-conductor company, they produce this at the company that actually produce the chip that is being sought after by different EV company and all that stuff. So I believe Nvidia is there as a good play for me. I'm waiting. Once I see the dip, I buy. I have some Nvidia, but I need to wait and see. Once I see a bit of dip, I buy before the earnings, and I play it like that, and I hold it. So I think if you do that as a smart investor like that, you're gonna make money. So well, at this point, I'll be dollar cost averaging. I'm not worried. Market has already priced in up to 3 or 4 interest rate by the Feds. So people were saying 7 times, Fed is going to be raising rates. Some are saying 5 times, but I believe market has already priced in up to 4 rates this year. So that's why you see the market go up all the way down again and all that stuff. So it's a crazy market at the moment, but once you pick up the companies, the good fundamentals, company with good fundamentals, just dollar cost average, and I think you're going to be happy that you've done that in a couple of years. So well, I've come to the end of this video now. If you've not subscribed, please kindly do subscribe to my channel, and I'll see you on the next one.